Hi, I'm Wale Adeosun. I'm the founder and chief investment officer of Kuramo Capital. Kuramo Capital is focused on sub-Saharan Africa investing. I'm here with Okey Enelamah. Okey is the CEO of African Capital Alliance, one of the pioneering private equity groups in sub-Saharan Africa. Hi, Okey.
Hi, Wale.
Good. So, Okey, as one of the pioneering private equity groups in sub-Saharan Africa, why don't you give us a sense of the landscape and how private equity has evolved in sub-Saharan Africa?
Very interesting question. I mean, what we are seeing is increasing interest in private equity, which I think is good. It's good in the sense that if you look at private equity globally, what we're finding is that people are finally discovering Africa, as it were, and the question they're asking is Africa ready? And I think as they dig into the facts, they will find Africa is ready. I also think there are a number of emerging GPs. Right. There are some that are established. We are in our third fund, and we've been doing it for 15 years in Nigeria, and I did it for 4 years before then in South Africa with a group that used to be called Brait. Mm-hmm. So there are a number of established players, and there are also new players coming in. So I would say the market is vibrant. I think it's good. Obviously, there are any number of issues to walk through, but in general, I would say the landscape is looking positive.
Excellent. And in terms of opportunity that you see, is that growing or is that just stable? How would you compare it from the past?
I would say the opportunity is growing, particularly when you look at sort of starting from the top, the macro factors, the demographics, right, of Africa is positive. I mean, most people agree that Africa is one of the more positive in terms of growth. Right. In terms of also deregulation and sort of the sectors that are opening up where private sector and private capital can come in, that's also positive. Mm-hmm. If you look more specifically at West Africa, where we are active, you will find that we're dealing with a number of big-sized opportunities in power, right, in financial services, mm-hmm, in oil and gas, mm-hmm, in fast-moving consumer goods, right, in healthcare, and a number of other areas. So we think it's very exciting times.
Good. Now, with the exciting times, obviously the capital has been flowing toward Africa. At least there's a lot of buzz about Africa and opportunity in the press these days. Are you worried about too much capital chasing fewer deals?
I think the way to understand the capital question is that there are a number of things going on.
Okay.
First, there is the whole issue of, the number of people that are interested. But what it actually takes for them to write a check, right, that work still needs to be done. Okay. So it's not as if some of this capital talk checks that have been written. Some of them are actually people who are showing up with their notebooks, right, and the checkbooks haven't come out yet, right? Okay. So, you almost have to discount that. Okay. And then the second thing is that also there are a number of people in fundraising, right, which I would agree there are a number of if you will, emerging or new fund managers that want to raise capital. And sure, unfortunately, not all of them will raise capital, at least that quickly. Mm-hmm. If you look at the established groups that have capital, yes, there is some amount of dry powder, as they call it, but right, the point is that people have different strategies. Right. And what we encourage people is to understand the various managers and what they're doing. And I know that takes time. Right. For instance, if you look at our own strategy, we are looking very deeply at the West African market, sure, even more specifically at Nigeria as one of as an anchor. Right. And what we find is that there are a lot of exciting opportunities we're seeing in fast-moving consumer goods. Okay. There are a lot of exciting opportunities we're seeing in the power sector, like I said, right, oil and gas, right, in banking. We just did a deal in banking, Union Bank, where we brought together investors, okay, to put $500 million to work. And frankly, that was a case where capital was short for a very large bank, the old Barclays Bank. Right. So I think one has to go deeper, like we had this morning from Nick. Right. Otherwise, if you stay at the very top and you take the headlines, right, at times, headlines and aggregation, and they can be misleading.
Sure. And so in terms of capital going in, obviously your perspective is that there's still not enough capital for the opportunity set on the ground, right?
Yes, for the various strategies that managers want to pursue.
Right.
Even if the headline looks like there's a lot of interest, and there is interest.
Now, how is Africa different from other private equity regions in the world, right? So how has the market evolved in terms of value add? Because in the good old days, there were financial providers, right? They provide capital, and they did very, very well. Has anything changed? Is there any emphasis on value add and operational?
That's actually a great question. If you look at what has happened in Africa over the last 10 years or so, right, I think what has emerged is that value add has become increasingly more important. Everybody talks about it, right, but actually doing it has become more important. Right. And I use value add more holistically to include knowing your market very well, mm-hmm, knowing the businesses you back, right, being there to add value once you've done the deal, sure, and so on. So you find that there's a renewed emphasis in players sort of being closer to the investments, mm-hmm, being on the ground, right, and understanding the business and helping those businesses to succeed, right, through the thick and thin. Because we've seen ups and downs, right? We've seen some downside, and our sense is that actually value add is going to become more important, and that's something we've always emphasized. We have over 30 professionals in our organization, and so we try to bring as much experience and expertise to bear on those businesses we're getting into, and I think you're going to see that trend continue. I'm sure the same thing may have happened to a greater or lesser extent in other parts of the world, but in Africa, where implementation makes a big difference, I would say that's even more important.
Okay, good. Then finally, give us a sense of what the exit opportunities are in Africa. There's a lot of talk about exits. You've been at it for a while now, and you've exited quite a good number of companies. So what do you think the trend is?
Yeah, what we find is that, first, exit is one of those areas where the talk and the reality, there might be some gap. And in this case, actually, positive, right? What I mean by positive is that what you find with the established groups, and I will use ourselves as an example, is that we've actually been particularly effective at exiting our businesses. I tell people that the great challenge in Africa and in private equity in general, for that matter, is to build or backgrade businesses, right? Because what we find is that, like, in markets that are difficult to implement, like Africa, having a great franchise means that you will command a premium when you're exiting. So if you look at over the 3 funds we've done, we've gotten over $700 million back. And I think that's over 10 times money if you look at the cost basis of the investments. And we've done all kinds of exits. We've done exits through trade sales. We exited a security guarding company to G4S that we had partnered with them originally to do, and they bought it back at over 40 times money. We've exited through sort of an IPO, which I shared as a case study yesterday. If you were there, a bus company operating in West Africa. We've done a leverage recapitalization where management bought back our interest at a decent IRR. So we've seen a variety of exits. I'm not saying the exits are easy, but I would say that we have found that if you do your homework before you go in, which means that you are getting the right sort of agreements and understanding in place concerning exit. And then you sort of also make sure that there are many paths to exit. I call it to actually liquidity and exit, which means you're getting money back as you go on, not a one-point exit sort of game plan, not a bullet structure. Our experience has been reasonably positive. That does not take away from the importance of exit. If anything, emphasizes it more, because it means that when you do your homework, you do get the results. And that has been our experience.
Excellent. Well, thank you very much for your time.
Thank you, Wale.
It was a pleasure talking to you.
My pleasure too. Thank you.